Awesome. Can we all see my screen?
Yeah.
A nod was nice. Thank you, Ben. Hi, everybody. My name is Cece. I'm a Senior Product Manager here at Wheel. Welcome to our session. Just before we kick off, I wanted to welcome you and introduce you to Wheel. Wheel are the team behind this event, and we couldn't do it without our wonderful sponsors. So a big thank you to our sponsors, Visa, Translucent, Fathom, Trace, and Mayday for making today possible. Now, in case you're just joining us, a quick reminder of the house rules today, which you see on the screen. We do want this session to be really interactive, so please feel free to ask questions. To do that, you can do that in a couple of ways. So you can use the chat function, so that can be found at the bottom of the Zoom panel, or the QA function. I'll then pose these questions to the speakers, potentially during the session or at the end also. So without further ado, I'm really excited to be emceeing today's session, where we'll look at new ways to optimize processes and improve cash flow with virtual cards. In today's chat, we'll be talking all things business payments, from working capital to card solutions, and focusing on new ways to manage the challenges that businesses face in payments today. I'm very lucky to be joined by, for this Q&A, by two very impressive leaders from Visa. We have Ben Adams, who is the Vice President, Head of Commercial and Money Movement Solutions for Australia, New Zealand and South Pacific, as well as Catherine Coulter, who is the Director of Small Business Solutions for Australia, New Zealand and South Pacific. So Ben and Catherine, welcome to the Australian CFO Summit.
Thank you, lovely to be here.
Awesome to have you. So to kick things off, I would love to hand over to you guys to just give a brief background and introduce yourselves. Ben and Ben, if you wanted to start us off.
Yeah, sure. So as Cece said, Ben Adams. My role, just to explain that a bit further, is to look after all of our products in the space of what we call commercial solutions. So that can be anything from commercial credit and debit cards right through to expense management solutions and effectively solutions to help businesses run the business more effectively. And then also on the money movement side, that can be anything, any of our solutions, from foreign exchange to money movement, alias directories, and again, things where people want to move and manage foreign currency. It also covers all that. So that is what I do at Visa. Catherine, do you want to go?
Yes, so I sit in Ben's team and I manage, as you said, CC, small and medium business solutions. So that in terms of businesses, that looks at sort of your micro startup sole traders up to, and there's a bit of sort of grey in medium-sized businesses, but up to about 50 million revenue turnover per annum. And so in terms of the solutions we have our sort of traditional core products, which are our debit and credit cards. So working with fintechs and banks on these solutions, as well as a lot of the value-added services that we have, such as virtual cards, which you touched on.
Nice. Thank you, guys. So we have a short amount of time today. We have about 30 minutes. So let's dive into the heart of today's discussion. I know I've had the pleasure of discussing these topics with you prior, so we have a lot of insights to share today. So I guess before we dive in, to set the scene, my first question to kick things off is to just understand and get your insight from a Visa perspective. I'd love to know what you guys see as the biggest challenges currently facing B2B payments today.
Did you want to go first, Catherine, or do you want me to?
Yeah, I'm happy to kick off, Ben. I love a challenge. So I think, and I think, in terms of, there's challenges and there's opportunities. Of course, we've seen some rapid changes to the environment and to how businesses do business since COVID. And I think some big themes came out of during that period that we've seen along the lines of activities that businesses needed to really do moving away from, say, your traditional bricks and mortar to moving online, and what that means to be successful. And so I think in those themes, to be successful, it has been around sort of rapidly digitizing and adoption, and sort of rising expectations of consumerization that we've seen for businesses. So that talks to, you know, how do they actually, as we know, businesses are time pressed and you know, and have a lack of resources. How have they been able to digitize their businesses so they can actually move their commerce online, and also open up other opportunities internationally? We've also seen themes like sort of financial services and third-party platforms and embedded payments, and how has that then helped businesses be able to use and have that expectation of using and obtaining payments in the moment when I need it. And I think another big challenge that's been that businesses have faced, CC, is we've seen the cost of funds being so high, and really how do we re-look at what we have, the toolkit that businesses have today? And one particular area where we see a big opportunity is how do you reposition your business credit card as a working capital tool? And I think moving away from perhaps using your business credit card as a traditional T&E type of product, to really uncovering sort of and developing cash flow solutions and targeting some of those B2B payment flows. Ben, did you want to add to that?
Yeah, no, I think they're all good. The only one I would add extra is, I think, again, because of the pandemic, supply chains were heavily disrupted. And that meant, you know, businesses of all sizes had to respond to the supply chain challenges. And then for businesses like Amazon, their supply came back on first. And so it still took a long time, but other businesses had to adapt. And what that really meant was turning to other markets. And so what we've seen is a globalization, a broadening of globalization in terms of turning to multiple and different suppliers in other markets, because smaller businesses and medium-sized businesses, they needed to respond in that way to keep their business going. And so, you know, what does that mean? That means more reliance on cross-border solutions, and just a different way of managing that supply chain.
That's super interesting. I think like the innovations that we've seen in this period have been vast and wide. Can you tell me a little bit more about the innovations that Visa has introduced to kind of make those B2B payments more efficient?
Yeah, maybe Catherine, I'll go first on this one. So we you know, there's many businesses, as Catherine says, that are already using cards as for travel and expenditure, and we've all been very, very familiar with that. We're seeing some businesses, and it's growing more and more, using that facility for other things like supplier payments. And I think historically, often people have thought, is that too expensive? But in a world where we're seeing cost of funds quite high, and therefore working capital solutions will be more expensive, you know, whether that's invoice financing or factoring or whatever that your business may need. You know, when you now weigh off the cost of acceptance, and so even if a supplier charges you for that, and maybe that's somewhere between 1 and 2 percentage points, depending on what that transaction is, there's times where it might make sense to put that on card. You know, you can get somewhere, which depending on the facility you've got, generally between 44 and 55 days interest free. Admittedly, that's the maximum, so it's somewhere in between, but you know, you're still talking 30 plus days of interest-free terms. And it also means you can pay that supplier immediately. So rather than that supplier having to then invoice you, maybe off the back of a purchase order, and go through the whole accounts payable process and that payment processed and transferred by the bank in batch, that can happen immediately. And what we're seeing is that's helping buyers and suppliers negotiate, and therefore make paying by card a sensible piece. And I think one thing we need to do is break down what a card is. So, you know, when you think about a credit card, and in this sense for business purposes, there is a line of credit that you've been pre-approved for, and there is an account number that is fully reconcilable and attached to that that line of credit. And that's really what by breaking that down, it hopefully removes some preconceptions around how that facility can be used, what it can be used for, and the value of it. So we're constantly trying to improve where that credential can be embedded. So can it be embedded in SAP if that's a platform you're using? How do we make sure the data flows are there so that reconciliation can be automated? And that's where virtual cards come in, because then if for each payment you can do a new individual virtual card, then you can fully automate reconciliation as well and pre-populate a lot of those data flows required for reconciliation. And so we're spending a lot of time, CC, in that space, and that's where we're hopefully people, businesses and your financial services providers are seeing us put a lot of effort in. Catherine, is there anything you want to add?
No, and I think that's a good summary, Ben. And I think one of the great example of innovation has really been virtual cards, and it's great that Will offers this proposition as well. I think in the small business side of things, we do see some very similar behaviours play out to how businesses react similar to consumers. They like to compartmentalise or make choices around whether or not to use a debit versus a credit facility. But we see, there's a lot of use cases with virtual cards and helping really uplift or reduce some of that admin, whether it's, doing some of those expense management activities to then push onto your cloud accounting platforms. How can business owners still have line of sight of their expenses, but empower, say, employees to perform those transactions on their behalf with carded controls, for example.
Yeah, Catherine, sorry, CC, it's probably worth making sure we level set on virtual cards and what a virtual card is. And in some ways, it's a bit, based on how I described it before, it's a bit of a misnomer in that, a virtual card, there is no card there. So there is, we call them virtual cards, but there is no card. It's effectively a virtual account number that is spun off of that, what we call the funding account, or the kind of original credit facility that has a card attached to it. So we're effectively creating another credential off of that, and you can put a whole load of parameters around that, like how it can be used, how long it can be used for. It could be if your business is growing, you don't want to give every employee a business credit card because they don't need them that frequently. Well, you can use virtual cards for that, so the employee can go on to kind of an app-based experience where they request that for a specific purpose, and that then gets approved by the manager or the administrator with the right control. So it could be just for that specific purchase or a specific merchant, or just for a one-off use, or just for a period in time. And so, whether that's for a specific supplier payment or whether that's for travel, it allows you to kind of have those controls. So that's what a virtual card is, and where that differs when you think about Apple and Google Pay and digital cards in there. If you think about your consumer experience, all that is a digital representation of your existing account number, rather than another different subordinated account number. So that's the difference between a virtual account and a digital credential. So one is just the digital representation of what you've already got. The other is a whole new account that is like a parent-child relationship with the original one. And so they are slightly different things, where the latter gives you a lot more control and configurability.
Yeah, definitely. It is a newer concept for sure. And, we're seeing in market that people are choosing virtual cards over, the more traditional payment methods that we generally see. And this is kind of a hot topic, I guess. I would love to understand, we know that there are huge amounts of benefits for virtual cards, but how are we seeing the use of virtual cards scale in market today? And what are those key barriers to adoption?
Yeah, I can get a go at that one. So I think in terms of the different use cases, sometimes it's I think there's an education piece around when to use a virtual card. I like to use the example of the tradie. So who thinking about sort of targeting your petty cash or a business owner that might otherwise get an employee to use a personal card and then reimburse afterwards or use their own funds, which is not an ideal experience. But if you think about some of those last minute incidental items that might need to be done on a job, a challenge that I think some of the trade industry has is, how do I know how profitable that house build has been if I don't have really good line of sight of those expenses and those last minute trips to, say, Bunnings to get those that equipment. So I think virtual cards can really play a role in, how do I issue virtual cards off a budget for, let's say, that house build, and ensure that it reconciles back. When I go through the expense management, it reconciles back into that budget. So I have really good line of sight of efficiencies. Similarly, Ben touched on sort of some of the enrichment of data. We've seen in terms of embedded finance use cases, we've seen some smarts around pass through of expenses as they come through. So an example might be a law firm who receives invoices in. Now, some of those invoices can be directly attributed to, say, a client's bill, but whereas another invoice that might be the monthly rent, that can't be attributed. So it's around detecting and having sort of AI and automation in there to help sort of allocate some of these expenses and charge onto a virtual card, for example, to make sure you're maximising the utilisation and have clear visibility. Ben, did you want to add?
Yeah, I mean, some other examples for me, it could be for non-employees that have some expenses. So it could be someone you're bringing in for an interview, or some consultants that you want to cover their cost of travel. Again, what would happen today? They would put it on their own facility, whether it's personal or their business, and then invoice you that later. Or you could actually generate a virtual card for that specific use. It also allows you to control exactly how much that is. What else have I got? It could be for a non-trusted supplier. So you haven't bought goods from that supplier before, and you want to leverage the fact that you're protected by using a Visa card to do that.
Maybe just to add on that, Ben, on the card controls. So, for example, the non-trusted supplier, maybe we haven't sort of called that out. So you can, as a business owner for that virtual card, you can set automatic blocks on certain transactions. Let's say there's no need for you to be performing overseas transactions or gambling, for example. You can sort of preset blocks on certain merchant category groups to ensure and have peace of mind that that an employee couldn't, let's say, go rogue and start using that card and spending elsewhere. You can also lock it to a single-use transaction. So the unknown supplier, which Ben spoke about. If you are doing business for the first time with someone overseas, you can set the amount that you've agreed to it, and they can only deduct that amount at a single use. And you can also set the expiry. So it just helps with some of those risks of fraud, which we know has been so prevalent in the last couple of years, particularly in Australia. So and also employee misuse as well.
Yeah, and then the only other examples that probably are worth calling out, we're seeing more businesses use it for even things paying like their tax. So yes, there is a surcharge there. I think for Visa at the moment it's about 72 basis points. But again, when you think about if you can get the timing right on that, if it's a credit facility, then you get a certain number of days interest-free and before it's even due. So depending on what your reporting is around your liabilities, there's essentially a one-off reporting benefit, but there's also the cash flow benefit. And if you are having to fund your receivables in other ways, then I guess there's a calculation to be done there, which is 72 basis points versus whatever you're paying for that worth it. So there's that kind of calculation as well. And of course, we've got the automation bit we talked about before, which is better data pass through, which means less effort in reconciliation of transactions. So that's generally the reasons we're seeing. So you can see there's lots of reasons, but there are a few of the ones that we're seeing as most common. I think we said, what are the barriers as well? I mean, I think barriers, some of it's awareness, some of it's misconceptions around whether someone wants to accept the cost. But we are seeing suppliers more and more open to accept, if they accept card for immediate payment, willing to do a different deal on whatever they're supplying at a better price because there's value for them. I think the user experience isn't there yet. We talked about digitization needing to come there. If it's not really easy for the employee that needs to use this thing, no one's going to use it. Like how easy or how hard are the processes? So, you know, CC, the likes of Wheel that are doing a lot in that UX space. It really comes together with expense management, and it's really who are you partnering with that's going to package that up so that everything's in one place for that employee. They can do their expenses there. They can request a virtual card. They can see the reconciliation. What brings all of that together so it's just really intuitive and easy for the employee to access.
Very much so. I think you said a lot of good things there just in regards to, you know, improving cash flow, making sure that we do leverage those working capital solutions. We know that cash flow is a very hot topic for all finance teams. It's super core to managing business finance effectively. You did mention something about the barriers to acceptance for supplier payments. Is Visa doing anything in particular to drive that greater acceptance specifically?
Yeah, do you want to take that, Catherine, or do you want me to?
I'll touch on it and then I'll let you add if you like. So I think, you know, in terms of, say, supplier payments, I think there is opportunity. And if we think about in this market, we did some research a couple of years ago, so it's a bit dated, but there's about 2.7 trillion payment volume in our market for small and medium-sized businesses, of which only around 4% is carded. So there's a big opportunity to sort of grow in this space and, you know, look at sort of what are those use cases that are needed. I think on the supplier payment side, because of cost of funds being so high at the moment, and the utilization of the card as a working capital tool is quite prevalent, there is opportunities, and what we've seen, and we've supported and facilitated this, but opportunities for, say, buyers to negotiate with suppliers on the cost of acceptance on that. Because as a supplier, if I'm getting, rather than my normal terms being, say, 30 days or 40 days, if I'm getting next day payment the moment my invoice comes out, there's a benefit to me. So I think what we would encourage there is, you know, negotiations and speaking to your suppliers on this and moving it to a carded payment. And what does that mean for your working capital position? Ben, did you want to add?
Anything to add?
No, I think that's good. I mean, virtual cards acceptance by suppliers can be a bit painful when it's happening frequently. And, you know, because you've got the card credentials to enter in and so, yeah, other invoicing information. So, and you've got to enter that generally into the business processing that transaction for you. So it's generally someone providing some merchant services or a gateway for you. And so an example so we've seen that pain point, and we recognize that's one of the barriers we need to overcome, because otherwise, like, if they're really big suppliers, and we see this a lot in the US actually, they then have entire teams that just process these transactions. So they're like, you know, lower skilled employees and lower cost, but it's still a burden. And so it's launched in America. We will bring it here. We call it Accounts Receivable Manager, and it's leveraging different integrations and artificial intelligence. I mean, it's a very much used word, but effectively, I guess it's just saying about some code that effectively will, if you've got a certain email inbox where those payment details come in, it will grab all of that, and it will automatically input and process those transactions from wherever you've told it. It can gather the information, so it removes the need to have an individual there. And so again, we're constantly thinking about what are the pain points, and we always want to hear what those pain points and barriers are, because we will then put effort into solving those and make life easier, whether that's for the buyer or the supplier.
And maybe just to add on the acceptance challenge, we do, and we sort of mentioned that earlier, but we are continuing to enrich some of that transaction data. So for example, if you were to book your flights and accommodation and what we call an OTA, which is an online travel agency, there is opportunities then to enrich that information on what was booked, and be able to send through to your expense management, let's say, to understand the flights and the accommodation. And when we've seen sort of fintechs then evolve that further to then allow businesses to overlay, let's say, their policy. So it might be, you know, domestic travel must only be economy, for example, and be able to flag if there's unusual kind of spending behaviour or outside of policy activity taking place. So we certainly sort of see that sort of other areas of how do we enrich and value add, so that business owners can keep good line of sight of expenses and know where some of their funds are going.
Awesome. And I think that brings me quite tidily to international spend and cross-border payments. We know that those needs are prevalent in the industry, and one of the key areas to look at for optimization of business payments. So knowing that it's core to businesses of all sizes, from SMEs to, you know, the Fortune 500 companies, I'd love to know what the main challenges associated with cross-border payments are today.
Yeah. I mean, I think there's many. Transparency can often be one. If the institution performing that for you, depending on where that money's going, there can be a number of ops in the process, or a number of banks that are part of that network to make it happen. And they have the chance to add a fee, which then becomes a deduction from it. So suddenly the amount that you think you've transferred is not quite the amount that ends with that. Let's say it's the end supplier in another country. So there's that understanding and transparency of those funds. If there's a complication, the visibility to that and needing to follow it up, and then the speed of which it happens can be frustrating as well. So, I mean, technically, in a simple overseas transaction, a traditional SWIFT model using a set of correspondent banks, so your bank that's doing it for you will have a set of partners that they've negotiated deals with to execute that transfer, and they have accounts with those. That if it doesn't go smoothly, then I guess that can take longer than it being immediate, and that's where tracking comes in, and people have to then follow up the bank to find out what's happening, and so it can create a bit more effort than you would expect there to be. So we are definitely working that space. I think it's probably an area people don't realise Visa are in. I think, as I mentioned out before, those products do sit under me actually, and so we have anything from cross-border foreign exchange solutions. So there's a business we've got called Currency Cloud that does real-time wholesale foreign exchange. So effectively, that business has gone out to the market, to some of the biggest banks, and they sit on a panel offering us in 35 different markets real-time 24/7 foreign exchange rates. And we, through a SaaS platform, serve up the best of those if someone who's using that platform pings it and calls the API. So if you're a business that optimizing those rates is very important for, because you're doing a lot of business, then that's a good business. It also allows you to set up named virtual accounts instantly in those locations, so you can effectively conduct business like a local there. So if you're the supplier and you need payment, let's say it's in the US or UK, and you want to if it's the UK, you just want to give a sort code and a bank account number, then you can do that in your name and immediately accept it. So we effectively spin up an account for you that acts like a domestic account there. So we have solutions like that, and we have alternatives to SWIFT as well. So whether that's Visa Direct or B2B Connect, there are a couple of our products and the names we call them, but they allow for fast, transparent, and often more cost-effective international payments. And so, we're seeing some really big banks using that globally, whether that's Standard Chartered or it's DBS in Singapore or Goldman Sachs globally. And so we're seeing more and more institutions turn to our alternative capabilities, either, as I say, for transparency, speed, or cost. And so we think that's an area that does need some improvement based on tradition CC. So we'll keep working in that space. And even an end state vision, I think our company would love to get to the point where we can expand our alias directory service, i.e. linking the payment details to an email address or mobile phone number. Like if we can get to a world where we can deliver that as a service as well, so you could pay anyone anywhere in the world to either a Visa card or just their bank account using either their mobile or email address, that would be a pretty big step forwards, because people can get pretty confused about IBANs and bit codes and all these other things that people need.
All of the terminology.
Exactly, that's needed today to execute a payment. So I think there is room to improve the experience there.
Yeah, nice. You did say some things about partnerships in particular. I think it would be remiss of us to have a session on innovation without talking about embedded finance a little bit further and kind of the rapid growth that we're seeing in this area. Can you just tell me what the challenges and opportunities are for companies looking to incorporate, more of an embedded finance solution into their business model?
I'll give it a go, Ben, and you can add to it. So I think this is a really exciting space that we're really facing into with embedded finance, and we're seeing a whole bunch of different use cases coming out around embedded finance, whether it's in marketplaces, let's say sort of where there's wholesale business that's taking place, there's a supplier and a buyer. We see there's a role to have an embedded finance, and that means that it actually encourages the business owner to stay in that environment and be able to make that payment and get those sort of working dollar benefits and negotiate supplier discounts and so forth. Not sure if you're aware, but we announced a partnership last year with SAP, which is one of the leading ERP platforms, and that is where we've brought in sort of corporate purchasing cards into the flow as one of the many options to make a payment. And I think on this, CC, it's around giving business owners another option, another payment facility, and what is the best one for them. We also see there's opportunities with embedded finance on what we call business payable solution providers, so BPSBs, and that's where a supplier or a business owner isn't traditionally card accepting, and having sort of an intermediary that enables you to make a card payment and get, say, the working capital benefits, and for the supplier in this instance to have those funds directly into their BSB and account number, and so they do not see any difference from that perspective. But I think there is a lot of opportunities, and we're sort of only at the start of, I think, uncovering what those opportunities are. I think there is, in the medical field, areas that we can play a role, and also in the agribusiness areas, and also what is a delicate balance in terms of what is the appropriate finance product to use. I think, for example, a farmer who's going to buy a tractor, they're not going to look to probably put that on a credit card, but it might be looking at, some other supplies like fertilizers and things like that. So it's around, what's that correct sort of amount which would be considered to be putting on a credit card versus, let's say, another offer in terms of, a business loan and so forth. Ben?
Yeah, I agree. I think this is an area we're going to see a lot of change in the coming years around embedded finance. I mean, we're seeing a lot of it in the consumer space today, and it's really now in the business space we'll see more of it. I agree, SAP is a good example. Us at Visa, we will keep trying to do partnerships with different businesses to enable that, whether it's across small, medium, or very large businesses where it's applicable. And as you say, it's for a range of, why are we doing it? Why do we think it makes sense? Well, it's for a range of reasons. Like the SAP one, for some businesses, it might be around cash flow, and therefore, it is around using a revolving, or using a credit facility that has these 30 to 55 days interest free. But in the same time, it could be, as we've talked about, the reconciliation ease. So because in that example, each time we call on a new virtual card, so effectively a new account for every transaction comes off that funding the overall parent account. And so when you think about, again, reconciliation, you already know that there's a unique number that immediately, in an automated way, ties to that transaction. And so, it's, as long as you make all the back end stuff work, you can automate that process. So, there's some businesses have some pretty large accounts payables team and pretty large reconciliation teams. And so there's a lot of benefit, I think, with that on embedded payments. And then I think the other bit we touched on as well is the expectations of your employees. So they are very used to now seeing embedded payments with the things they do in their consumer life and doing lots of things in mobile in a very nice an easy, intuitive user experience way. And so I think embedded payments will enable that more in the business and corporate space as well. So where people are, whatever activity is that they're doing, that payment option will be there and then. So it should save time. It should help eliminate processes, approvals, all kinds of things that just get digitized. So I think there's a lot of benefits for business.
Do you think embedded finance in particular will replace traditional banking, or how do you think that will interplay in the future?
It's an interesting question, CC. I don't think so. I think there's always still a very important role that the bank plays, but I think there is a threat of disintermediation if banks don't ensure that they are providing value, insights on my business, and being a place for business owners to be, let's say, logging in and seeing, what's my cash flow position. We've seen rapid evolution of that with some of the cloud accounting platforms where traditionally a lot of them were more for accountants and bookkeepers, but they have developed really intuitive insights around how's my business performing. They've received direct feeds from the banks, so you can see transaction information and so forth. And so I think that is a threat if banks don't react and bring those insights back to customers, so that I am going in there and looking at my cash flow position. I am making those decisions around should I employ more more employees or not. I think that is something that's a delicate balance, and they should be considering.
I think there'll always be a balance as well, and I think it might depend on the complexity of the transaction or the type of business. Some businesses are have better cash flow than others. So I think it'll be a variety of things that will drive it, but I think at some point we'll reach some equilibrium, but it's going to be a long journey, as we see this evolve. And but we're in a period where working capital is challenged for some businesses. We've recently done we call them growth corporates, or their upper mid-market customers, a working capital index. So we surveyed 850 CFOs recently and treasurers to get insights on how they're thinking about working capital, so their intentions around it. Like some of the findings on that, 80% of firms are using external financing, but it's mainly bit for tactical rather than strategic. So we think there's an insight there around businesses thinking about it more from a strategic growth point of view. Like, what are they missing out? What growth are they missing out on? Interestingly, the people we surveyed, there was a 30% increase on the intention to use working capital next in the coming financial year. So that does kind of infer people are switching to think about how do they grow their business. I think we've gone through a stabilization period where costs have been really challenging. The employee workforce has been challenging. But whilst there's a bit of uncertainty, and we even saw today, the NFIB Small Business Optimism Index came out in the last day or so, and that's gone up very slightly, but we're still 28 months below the long-term average. So businesses are lower on confidence, but that confidence is gradually improving. And I think it's just that there's the unknowing nature of how inflation and the response from the RBA and other things are going to play out on the consumer. But it feels like, certainly nothing bad's happening. So it's as in, we're not seeing unemployment spike or any of those kind of things. So I think we're just in a bit of an unknown area where people are being cautious. And this survey tells us that we think businesses are thinking about how they use working capital more to grow in the coming period of time. So hopefully we see businesses drive more growth.
Yes, very different. I think the payments industry in particular will look very different in the next kind of 3 to 5 years. With that, we are at almost time. So just to enable anyone who wants to pose a question to our experts, please post them in the chat or in the Q&A box. I can see there are a couple. Grace's question: how do you compare Visa card fees and charges to other payment platforms?
So I wonder what that's comparing to, but there's obviously some variability. I mean, ourselves and MasterCard are probably pretty similar. There's some others that are more expensive, and there's some others that are cheaper. I mean, I think the way you break down the costs of acceptance is probably generally it's made, it's whoever's providing that service, but they're generally making it up of 3 things. And so that's a mixture between interchange, which is the exchange of value between the merchant or the supplier and the card issuer, so the bank. Some fees for using our platform, plus whatever the service provider to you is giving. So that's generally the acquiring institution. And so that's what drives those costs. And so there's a bit of variability, but I would say typically for a Visa, to accept a Visa card, you would be expecting, if you're accepting a debit card linked to a transaction account, you should be expecting that to be the cost of that to be anywhere around, let's say between 0 and 50 basis points. Whereas for accepting a credit card, then again, it depends on your mix of corporate, commercial, consumer. That might vary anywhere between kind of 1% and 1.5% is probably what you commonly see. And merchants are allowed to surcharge that. So regulation says they can surcharge the cost of that acceptance. You can't charge more than that. You can just surcharge the cost. But we certainly see at those low levels, if someone's looking at factoring their receivables or invoice financing, then I think there's a good chance accepting card and getting that payment in sooner is actually going to be if you do the maths, probably quite a competitive situation.
And I think just to add to that, we do have a sales, merchant and acquiring team who are constantly sort of working with our acquirers to ensure that we are sort of breaking down some of those fees that we charge, because sometimes they can be sort of wrapped up into one, but having better visibility for customers to understand what those Visa fees are, because at times you'll be very surprised that we are in many cases sometimes lower even than FPOS on certain transactions. So it is around providing better visibility, and I think also ensuring that merchants aren't over surcharging and only surcharging what they need to.
Nice. I think we have time for just one more question, which has come from Frank Chai. What is the risk level of using a virtual card with cybersecurity issues?
I would say non-existent. Well, a virtual card, because it's all in the digital space, the controls there are better than anywhere. And firstly, you can put the controls around that number that's created. That number is not the account number to the core parent account, so you certainly can't access that. And often that will be a random number for that virtual card. So again, it's kind of even if someone could hack the supplier and take that number, it's kind of useless. So that's the beauty of virtual cards and digital cards, is that it does remove a lot of the traditional risk that people would expect. So if if anyone's had issues with their card, if you're using a card online, so that's where most fraud happens today, and that's because the merchant you're shopping at then stores those credentials in their raw form, which we generally don't encourage because we have tokens that they can use that completely mask all those details. But there's still some businesses holding those, and if they don't have the right security, yes, they can be hacked, and then that's when you might experience some fraud. But with virtual cards, that's not something we see.
Nice, very nice. We are at time, so we will need to wrap the session here, but I wanted to thank you so much, Ben and Catherine, for joining us at the CFO Summit today and sharing the vast knowledge and insights from your perspectives. That was really awesome, and I personally learned a lot, so I hope everyone in the session did too. So just thank you to everybody for joining our session. Hope to see you at the next one, and big thanks to you, Ben and Catherine.
Been a pleasure.
Thanks,
Thank you,
Cece.
Cece.
Thanks, everyone. Thanks for having us on.
Thanks, guys.
Okay, bye.
Bye.